Before we start to think about any of the detailed tax calculations, one of the first aspects of income tax to consider is who is actually subject to UK tax. This is what we mean by the scope of income tax, who is charged and on what. One of the key factors to determine which people are subject to tax in the UK is their resident status for tax purposes. This is not necessarily the same as the ordinary meaning of the word residence, but based on specific tax legislation. An individual who is determined to be UK resident for a tax year is liable to UK tax on their worldwide income, whereas a non-resident individual is only liable on income arising in the UK. There are three possible stages to determining whether an individual is UK resident or not, which are worked through in a specific order. Stage 1 is to consider whether that individual is automatically resident overseas. Stage 2 would only be considered if Stage 1 did not produce an answer, and is to consider whether the individual is automatically UK resident. The third and final stage is only considered if no answer can be achieved from the first two. This stage requires us to consider the number of ties that individual has to the UK compared to the number of days physically spent in the UK. Let's start by looking at Stage 1, the automatic overseas resident test. Within each of these first two stages, there are certain tests which can be used to help us. An individual would be determined to be automatically resident overseas if they were UK resident in any of the last 3 tax years, but physically present in the UK for less than 16 days in the tax year under review. They were physically present for less than 46 days during the tax year, being the year in which they first came to the UK. Or they were employed overseas on a full-time contract and their days in the UK total less than 91 days for the tax year under review. If the circumstances for this person fall within any of these, they are determined to be automatically resident overseas and no further tests need to be considered. If none of the circumstances for Stage 1 apply, the next stage to consider is whether the individual is automatically UK resident. An individual would be determined to be automatically UK resident if they spend at least 183 days in the UK during the tax year, their only home is situated in the UK, or they were employed in the UK on a full-time contract. As with Stage 1, if the circumstances for this person fall within any of these tests, they are considered UK resident and no further work is necessary. The final stage of looking at whether the person has sufficient ties to the UK to be considered UK resident will only apply if the previous 2 stages have not produced an answer, and so is likely to only be relevant to people with relatively complex affairs. This test requires us to look at how many ties an individual has to the UK and compare this with the number of days physically present in the UK in the tax year under review. There are 5 potential ties to the UK. The first is where we have close family living in the UK, like spouses and children under the age of 18. The second is where we have a house in the UK available to us for at least 91 days of the tax year. For those who are not resident in the UK for any of the 3 previous tax years, the days in the UK totaling more than the number of days spent in any other country would count as another tie. We could also have a tie if we have 90 days or more in the UK in either of the previous 2 tax years. And finally, if we undertake substantive work in the UK for 40 days or more during the tax year, that would again be considered a tie to the UK. In terms of the number of days, the tax legislation provides a table of how many days an individual can spend in the UK for a tax year, depending upon whether they were previously UK resident or not, which we match with these ties to give us an answer under stage 3. So let's take a look at some examples. Firstly, let's consider Sarah. Sarah spent 40 days in the UK during the tax year whilst travelling the world. She has not been considered UK resident previously. Looking at stage 1, Sarah would be considered automatically resident overseas as she has spent less than 46 days in the UK during the year. We do not need to consider stages 2 or 3 because we have an answer from stage 1. Let's consider Ken. Ken owns a house in the UK but has spent some time during the tax year on cruises and visiting various friends overseas, so he has only spent 60 days in the UK during this year. Ken doesn't fit within any of the circumstances to be automatically residents overseas under stage 1, so we move on to stage 2. As the only home Ken owns is in the UK, he would be considered automatically UK resident. And one more example, let's think about Tom. Tom has always been resident in the UK, but purchased a villa in Europe at the start of the tax year. The villa needed some restoration work, so Tom spent most of this tax year living in the villa, but his wife and children remained in the family home in the UK. Tom spent a total of 100 days in the UK with his family. Starting with stage 1, Tom does not meet any of the circumstances to be considered automatically resident overseas. So we move on to stage 2. He does not meet any of the circumstances here either, so is not considered automatically UK resident. This means we have to move on to stage 3 and consider Tom's ties to the UK and the number of days physically present. Looking at the table, Tom falls into the category of spending between 91 and 120 days in the UK and was previously UK resident. So, with 2 or more ties, he would be UK resident for the tax year under review. Tom actually has 3 ties to the UK. He has close family living in the UK, both his wife and children. He has a house available in the UK for at least 91 days of the year. It's actually available to him for the whole of the year. And he also spent at least 90 days in the UK in each of the previous tax years as he was UK resident before this year. Tom is therefore considered to be UK resident for the year under stage 3. Throughout this session we have been talking about counting number of days physically spent in the UK. However, we need to consider this a little bit further. What about if an individual flies into the UK at 10 in the morning and then flies out again at 7 in the evening? Is that a day that we count as being physically present in the UK? Well, no. The tax legislation tells us to count only those days when a person is present in the UK at midnight as being a day spent in the UK.